Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And yesterday I started my series with 5 undervalued businesses, and you find the link to the first video here up on the screen. And today I want to continue with a second undervalued business to buy and hold for the long term. And today I will talk about a business from the sector which Warren Buffett loves the most, and this is insurance. And the insurance I want to analyze today is Progressive. As you maybe know, if you follow me for a while, in my European portfolio I have 2 insurances. One, Allianz, the biggest insurance in Europe. Very interesting, still quite cheap as a lot of these insurance companies right now. And the second here is Münchner Rückversicherung. This is a reinsurance, also very solid company to hold for the long term. And so both of them are part of my European and German portfolio, and I think I will hold them for quite a long time. On the other hand, in my North American portfolio, which I talk a lot here on this channel, and you get an update every weekend of all my transactions in this portfolio, I have no insurance yet. But I really would like to have one because I like the insurance companies. These are stable businesses, good dividend payers. And if you find a really good one to a reasonable price, then this can be a very good investment over the long term. And so today I want to take a look into Progressive. Progressive right now traded at $89 with a market capitalization of 52 billion, a PE ratio of 9, and a forward dividend yield of 5.47%. So Progressive is a high dividend payer. The Progressive group of insurance companies is in business since 1937, is one of the country's largest auto insurance groups, the largest seller of motorcycle policies, the market leader in commercial auto insurance, one of the top 15 homeowners carriers based on premiums written. And when we look on the long-term chart of Progressive, then you see this looks really nice. And if you're invested in the 80s or 90s and just stick with it, or you would be a rich man right now. And so this is really kind of a compounder. Like, I like it as a long-term value investor. And then of course lately, over the last 5 years, it just jumped up a lot. And so it's interesting to take a look at it and see if it's a buy right now. And as always, to analyze the business, I go to macro trends and then I just go through all the financial numbers, and starting with the revenue. And when we look at the revenue over the last 15 years, then we see this just grow over time and lately really grow fast. Very good, very nice, very stable picture for a long-term value investor. This is kind of slow, but very steady. And the same we see when we look at the earnings per share. Also here, it just grow over time, and over the last 5 years, their earnings per share from $2.15 to right now $9.66 for the last year. Very good, very nice. And all of that is possible with a net margin of 13%. And also their returns here, the return on investment was 25% and the return on equity with 34%. These are very good numbers, and we also see here they just build over time shareholder equity. Very good. And with that, they are able to produce very stable and growing free cash flows. And this, of course, at the end is the most important thing, to have a good cash flow. Very good, very stable. I like it. And then also take a look at the balance sheet, and then we see that they have a debt equity ratio right now of 0.32%, so nothing to worry about. There are long-term debts of 5.4 billion compared to shareholder equities of 17 billion. So also very good, very solid balance sheet. And so once again, we have a very high quality business here, a business which is growing slowly but steady, and is able to produce high cash flows, so everything's fine on the financial side of this business. But then, of course, you also have to keep in mind that the whole insurance business and car insurance business is high competitive. And so it's really a hard fight in the insurance sector, and they have to fight against Warren Buffett's Geico, State Farm in the car insurance, Allstate, and so on. So really, really difficult. And of course, you have to keep that in mind when you invest in Progressive or in all of the insurances. Is really a hard business. And then on the flip side, of course, with the jump in the interest rates lately, maybe a new cycle start and the interest rate will go up a little bit more. Here we see over the long term the interest rates are still very, very low. And so this will be very interesting for the whole market, of course, because this could be a big problem for the high growth stocks, high growth businesses, which depends a lot on debt. And so it's even more good to have businesses with very low debt. And for insurances and banks, especially, higher interest rates would help a lot. So very interesting also from this point of view. But then, after we know we have a very good business, of course the question is, what's the intrinsic value? And is it the right time to buy? Because as you maybe know, I like to buy my businesses under the intrinsic value and way under the intrinsic value. When I calculate the earnings of Progressive, the latest earnings of Progressive, and then calculate with a very slow growth of 3 or 2% per year, and discount that with my expected return of 12%, then I come to an intrinsic value of around $110. And so Progressive seems to me like 20% undervalued right now. This could be a good chance to build a first position. I really think about that. We will see. It's high on my watch list, and I really would like to have an insurance in my portfolio. So it's very likely that maybe in the next few days or the next weeks, I will buy a first position into Progressive, because we have a high quality business here to a reasonable price, I would say, and of course with a high dividend yield. Also something to keep in mind, of course, especially for the long term when you compound also the dividend. So that's it for today. Thank you for watching. If you liked the video, please subscribe to my channel and ring the notification bell to never miss another video. And then we will see the next time with the analysis of my third undervalued business. This will someone maybe never heard about. So see you the next time. Bye bye. Take care.